Hello, it is Sunday the 11th of June and we are waiting for the futures to open. Next week is one of the busiest weeks of the year in terms of financial data. We have got three central banks, the three biggest probably central banks. We've got the Federal Reserve on Wednesday, we've got the European Central Bank on Thursday, and we have got the Bank of Japan on Friday. So that's quite a lot on its own. We have also got US CPI, US inflation data right ahead of the Fed meeting. We've also got GDP for the UK and for New Zealand. So there's a lot of news out there. We've got a new moon, which quite often, if you follow the kind of cycles, is a little bit of a turning point for the market as well. And that's on Tuesday, just ahead of the Fed. So there's a lot going on this week. So the most likely central bank to hike is going to be the ECB. They are pretty much programmed to hike a quarter of a basis point, so 25 basis points, so 1/4%. That would take their rate to only 3.5%, so they really are lagging. The Fed, though, the Fed has put out this idea of skipping this meeting or a pause, and I kind of feel like they may have painted themselves into a bit of a corner, because if they pause this month, then they kind of need to warn the market if they're going to hike again the following month, which would kind of put them in a position of pre-committing, which they really don't like to do. In fact, if we assume that they don't like pre-committing, then, just suggesting a skip for this month doesn't mean they're actually going to do it. In fact, it may mean that they don't. And so I think that the CPI data that we get on Tuesday, which is the day before the Fed meeting, so that's going to be Tuesday the 13th, and that's an hour before the US Open, that CPI data is going to be really, really important. So it is forecast to fall. It's forecast to come in, 0.2% this month, core CPI at 0.4, and annual CPI at 4.1, down from 4.9. So yeah, if it surprises higher, then I wouldn't be surprised that, the market is very rapidly going to be pricing in the Fed hiking on Wednesday, if that's the case. In terms of the Bank of Japan, though, at the end of the week, they're the one central bank. We've got a new central bank governor in Japan, and this kind of time frame, this meeting this week, was the one, if he is going to change monetary policy, then everyone suggested that this was the week that he is going to do it. However, surveys a week ago said that there was like a 30% chance of a policy change. That's now down to less than 10%. These central banks, they don't like surprising the market. I think a lot's going to be in the comments, but I'm not actually expecting any kind of a move from the Bank of Japan on Friday, but we'll update that later in the week. For now, we've got to get through Tuesday and Wednesday, which is going to be all about the Fed and the dollar. In terms of Monday, we also have a whole bunch of other data that the market will be looking at. So it's going to be, we've got, I should also mention, we've got the debt ceiling drama behind us. But the last time we had a debt ceiling drama, which was in 2011, the market fell really hard after the debt ceiling was done. And the fact that the Fed haven't been able, so the fact that the US government really couldn't issue any more bonds since January, and have since been spending down their account at the Fed, now means this summer they have to issue 5 times more bonds than they would normally. And a lot of macro commentators are talking about how that could cause some disruption in money markets and money market funds and in bonds. And that, if that spreads wider, and we've seen that happen before, could cause some disruption. So if we're wondering, we're in a spectacular, obviously, bull market in stocks at the moment, everything's pushing higher despite all the gloomy narrative. But if something was to kind of make that stop, I think that that may be the driver, so we need to watch out for that. I will talk about that more later in the week. So those are the important days to watch out for. In terms of data on Monday, we really have very little. And in terms of overnight in China, we have very little as well. In Japan, though, we have overnight, we have PPI. But it's pretty much a quiet start to the week, and everything, I think, will trade sideways into the CPI data on Tuesday and then the Fed on Wednesday. It's been really dramatic, hasn't it, lately? Dramatic in politics, the arrest of Donald Trump, Boris Johnson resigning in the UK. There's an awful lot of drama in so many things that really aren't market related. Then all of the crypto witch hunt in the US. There's quite a lot going on, and it's easy to get distracted. When I'm not sure what's happening, I really kind of focus down on the charts. So I'm going to start tonight with the dollar. I'm just going to take a look at a couple of stock indexes, and then we'll talk about a little bit of crypto, but which, you know, has obviously gone back to the bottom of most sideways ranges, but isn't crashing. As I said, I was expecting us to trade sideways into the Fed, and that seems to be what we're doing. So let's talk about the dollar. As you know, in the dollar, I think that big picture, this is a 4-hour chart. I think we're making a 5-wave rally from the low that we made in middle of April. So 1, 2, 3, this is wave 4 that we're in, and we've got one more leg higher. We dropped on Friday underneath the 61.8 level, which is at 103.589. As long as we stand underneath that, I think the dollar has got a little bit further to fall to 103.8 and back to these previous lows, back to the 4-hour 200 moving average. We're a bearish cross of our 4-hour moving averages. So that's how I'm seeing that. And that would mean that we've got one more squeeze higher in these currency pairs against the dollar. So here you can see that the euro is going sideways. If I put this on a 4-hour, we're kind of paused at the highs for last week. This was the high from the Friday 2nd June. This was the high from the Friday 9th of June. I think also this should make final swing 5 waves, 1, 2, 3. So we've got one more push higher before we finish in this euro. And that also means that we could see a little bit more of a bounce in stuff priced in dollars as well. If we take a look at, I'm going to look at the ASX and then the Asian stock indexes, and then we will look at the other ones ahead of tomorrow when we see how the futures behave overnight. So if we take a look at the Australian Stock Exchange, we've been sideways in this one. For me, when we look at this on a daily chart, I think we're making big 3-wave moves here. So from the high that we made on the 2nd of February, we had a nice 3 waves down, and then this rally here got up to, if we put our fibs on, 786 retrace level. Sorry, I'm not being a bit slow here. There's my 786. So that was the high. Now when you do that, there are 2 levels that you go to. Either the 38.2 is your nailed on first target, but sometimes you extend to the 236 fib, which would mean in this channel we could see one more swing lower to 6999, and it's going to be all about this daily 200 moving average. If we lose it and get stuck underneath it today, or it gets very volatile, I wouldn't be surprised if we see one more swing lower, and 7,000 or 6,999 is where I would be looking for support for this, and then I would be looking for one more swing higher in the ASX. So short term, we're waiting for this to open. Remember, 71.03, this sideways range, we could basically also just trade sideways into this busy kind of data week. And if we were to flip the short-term trend here on the hourly, In other words, if we were to take out these highs at 71.32, which on a bounce on the open, that would be my key level to watch, 71.32. If we can hold above 71.32, I think that we've done that 786, 38.2 thing, and we would be looking for the top of the channel. So short term, that's the level that I would be watching. I don't know which way we're going to go tonight. I don't know how this open goes. But again, if we hold the lows, bounce higher from here, and we reverse this downtrend, I think we could see a much, much bigger move higher after a nice double bottom in this ASX. If we take a look at some of these other, like this Nikkei, I'm a little less bullish. If I look at this on a monthly, I had a monthly level here, big picture in this Nikkei, and we've reached it and we've hit our upside target. And it's kind of one of those levels where, it's kind of one of those levels where I would expect a pullback from here. So big picture from the high that we made in 89, I know it's a long way out, to the low that we made in 2008 credit crunch, we're at a big 786 fib level. Now you can see that 236 was the first time for 6 months was resistance, then it was support. This 50% was a little bit sticky. The 38.2 in the middle here was resistance, then support. I haven't got it drawn in. And so we were a little bit funny around this 61.8. I wouldn't be surprised at all if, this is one of those levels where we see a bigger pullback. Also, if I project from this high to this low, we are potentially at a resistance level from that as well. So I'm watching to see what happens at this Nikkei, and obviously with the Bank of Japan at the end of the week, we could go sideways here. But if we continue higher, obviously, the thing about 786 fib levels is they're pretty sharp, and that's at 32,084. So if we hold above this, we're obviously going to be looking for the 886 next, and I better mark it in. So I'm really watching to see here, potentially, we've already had one swing back, and we're trading sideways at this big deal fib level. So I'm waiting to see. When I look at certainly US stock indexes, all of them are got lots of more room to the upside. It's just this Nikkei that's one that's kind of got a really important level here that I'm keeping an eye on. So that's where we are for Asian trading for those. If we take a look at the NASDAQ, which for me is the most correlated with crypto, you can see from the highs that we made in November 2021 to the lows that we made in October 2022, we have back tested a big 236 fib level. And if I put my fibs on from this high to this low, you can see that we have pushed past, I'm going to put regular candles on, and held above this 61.8 fib level. So the 786 on this short term for me is the next upside target in the NASDAQ, and also these previous highs, as long as we hold above here. So you can see that this is in a really strong bullish trend. We are overbought, in overbought territory here on the weekly. We are, we've got some bearish divergence as well on the daily chart here. You can see markets making a higher high, new high, and the RSI is making a lower high after a double top. So this does point to potentially this being a little bit of a topping pattern or a bigger pullback to you. Now, if we've just overshot this 61.8 here in the NASDAQ, the most likely pattern we're going to make is a head and shoulders pattern. And this double bottom previous low, which is the low from the 1st of June that we retested on the 8th of June, is going to be key. That's what I'm looking for. We had a little bit of a tail on Fridays, but at the moment, you can't argue that this isn't a bullish trend. And if we don't break these lows and we don't break down, then 15,434 is where we're going. So going to be a very interesting week, and a reversal, a false break higher here would be quite something. Okay, we've got a very similar pattern going on in the S&P. So remember on this chart here, we were looking at this 61.8 level and we gapped above it. So Friday's candle was a gap above this 61.8 level at 4309, and then we've got a doji. That's a candle of indecision. If we were to gap back underneath here, an island reversal or something like that, that would be quite a bearish pattern. We also had a bit of a level here where we had a little bit of a measured move level. So I can't remember quite where it was, but I think if I measure from here, it wasn't there. That's right. Anyway, I won't do that now. Key support then this week, if we are going to keep staying bullish, is going to be this 61.8 when we test it from the other side, 4309 in the E-mini. And so we've got some volatile days. I'm going to be watching this level to see if that holds a support. If we, what I would like to see if we fill the gap is we might dip underneath it. So it's going to be a daily close. If we fill this gap, I'd like to see buyers here in this pop straight back up above this level in the S&P. So that's what I'm looking for. And we may have to wait until Tuesday, until the CPI, till we get a bit of a direction. That's what I'm looking for. Now in crypto, last week, initially, when we had this news about Coinbase, we saw a really sharp rally in Bitcoin. If we look at it here on this hourly chart, this was our really sharp rally. And I was thinking, we could see a pullback and this continue higher to the top of our range. It didn't though. It failed at the moving averages on the hourly, and really we ended up in a sideways range. So far over the weekend, the lows have held very nicely. If we take this first low here as our low, we've retested it. We're holding above it. I think there is room for us to dip a little bit lower in a fifth wave in Bitcoin. So to 25,000, and then we'll see what happens there. So this is 1, 2, 3, 4, and one more. I know this looks very choppy and overlapping, and we, but in a fifth wave or an ending diagonal, it does often look like that. It looks non-trendy, choppy, and overlapping. For now, though, to be honest, these previous lows are pretty good support, aren't we? It's just I'm saying that we could go a little bit higher. We could get up to this hourly 200 moving average and still be going low. But at the moment, this correction and this correction look very even, don't they? So I wouldn't be surprised if we don't tip a little bit lower. And, for everyone that I hear really bearish about crypto, I hear people waiting to buy at 25,000. So, I'm so sick of reading people who think crypto's all over, or I think a lot of shit coins are all over. I think a lot of, the scams are all over, but I'm absolutely sure it's not all over for Bitcoin. So for now, at least, I think there is the risk of one more swing lower in Bitcoin to 25,000. Even if we go all the way up, unless we break this trend line, I still think that there is a risk that we have one more push lower to that 20,000. So if you're buying before then, buy carefully and don't let it come all back on you. So yeah, it's going to be a wild week. It'll be much better when we get it out of the way. Pretty much all of the Wells Notice regulation data that news that we were waiting for has happened. The one thing I think that could be a negative for Bitcoin is Bitcoin's a really good indicator for liquidity in the US system. When there's plenty of liquidity, Bitcoin does really, really well. However, if we end up with a little bit of a crunch post the debt ceiling with the US government with all these bonds to sell, that could give us the bigger pullback that we've been thinking we might get in Bitcoin, because Bitcoin is a really good leading indicator. It's a leading indicator for turns in stocks, and it's very sensitive to liquidity in the US particularly. Okay, so still a risk of one more push lower. In fact, if we look at it in terms of daily candlesticks over the weekend, we had a nasty down candlestick on Saturday. This bounce that we have today hasn't closed more than 50% up on this bearish candlestick. So that's still in play unless we close above that 50% level. So remember, when we have a big down candle like this, we measure the open close. And if we do that here, then our 50% level is 26,173. So we need to close above 26,173. And when we look at it here on the hourly, as you can see, we are already heading lower from that 50% of Saturday's candle lower. So 25,000 is going to be all about what happens there in Bitcoin. I'm going to take a quick peek at ETH because we've got a very similar pattern in terms of a bear flag, and I think that there is the potential for a bigger pullback in ETH. Now in ETH, when I initially looked at this, okay, and this whole move from June last year, so this is a year's worth of daily candlesticks, it wasn't clear to me whether this was a wave one or whether this is, you know, a funny ABC. In terms of shape, this looks like a bear flag, doesn't it? But you know, in both of these you could argue that there are 5 waves. So I'm gonna, when I put the measured moves on, you can see that this 61.8, so if I measure from this low to this high, projected from here, this 61.8 level became really important support, and yesterday we broke down underneath it. So a really important support and resistance level all the way back, to be honest, till last September at 1776. And I always said that that would kind of confirm if this was an ABC. So on the weekly open tonight, I really like to see us back above this 76 level. Otherwise, potentially, this is a little bit more bearish. It is also the weekly 20 moving average. You know, here we found support, bounced from it, found support, bounced. Closing back underneath this 20 moving average would put us at risk back to these weekly moving averages and a bigger, really a bigger correction. If I put fibs on from the lows, we've been dancing around, haven't we, sideways at this 236 fib. Now we could argue this, if this was a wave 1, 2, this is the most recent swing. I think it's maybe more effective to look at this as a 38.2. But either way, 1776 and staying underneath 1776 is more bearish and brings us back to these lows and potentially 1560. I think one of the biggest risks with ETH is what's going on with Ripple. Okay, to be honest, for me, if we get news that Ripple is found to be a security, you know, it's going to be too late to buy or sell Ripple when that news comes out. But I really do think the trade is going to be ETH, because ETH is in danger if they find Ripple as a security. I think ETH really benefited this war. You know, this also, we've got to say that this war that the US government are waging against crypto, and particularly against staking, is a really big deal. You know, my old boss, the hedge fund manager, the only reason he got into crypto was because of staking, and they used to really like ETH because they could earn a yield. You know, my boss never ever liked taking directional trades or bets. He would always prefer to earn a yield on something, and so for that reason, you know, ETH was hugely popular with hedge funds. And if that all gets shut down in the US and doesn't restart, that will be quite a negative for ETH, and that's what we need to watch out for. So 1776, key level. At the moment it looks like a bear flag and we are underneath it. That really kind of almost makes this a sell, doesn't it? waiting for this to, hasn't quite rolled over red or on our CCI, but hourly sell potentially setting up. I prefer with this bounce to wait for the 4 hour to turn lower to sell the hourly at this point. I don't like trading the hourly, remember, in a direction if the 4 hour is going the other way. So if the 4 hour is still bouncing, it hasn't rolled over, quite careful with hourly moves. So just because it could end up being a bigger correction. So watching for another swing lower in ETH if we stay underneath 1776. Pretty bearish for that reason. And all of the coins that were mentioned, you know, in the Binance lawsuit have really suffered. And we're watching these to see if we get the retest of the lows. So Filecoin looks all set to retest the lows. ADA, you know, really a nasty move over the weekend. Let's take a look at ADA. Now, ADA at the moment, here was our move last week after the lawsuit. On the weekly, you know, the moving averages on the weekly were still bearish, but on the daily, we looked like we potentially had a really nice setup. What I was depressed about is how we went all the way down and retested the lows on the daily yesterday on Saturday. Now, we see this pattern a lot, don't we, in crypto? Swing failure, retest of the lows and a slightly lower low. So like here, a low, slightly lower low, and up we went. It does that a lot. High, slightly higher, high. Anyway, potentially, therefore, this could be a bullish reversal in ADA from here. If we can close above, first off, if we looked at the daily candlesticks, if we closed above the 50% of this open close here, and if we closed above the 236 fib from the high. Otherwise, I'm afraid ADA is still in a downtrend and making a bottom. So 0.2849. I also, you know, it's very risky buying these coins that the SEC have named without a really, really good setup. So I just warn you against that, because there is room for this to go lower. You know, we're just, yeah, it could, you know, it could be game over for these that the SEC have named. We need to be very careful before dabbling with them. So watching to see, again, if we get above that 236 fib level, if we can make up more than 50% of yesterday's open close, that would be a good look. I would prefer in this one to see these lows retested. I think with the chart pattern in ETH and Bitcoin not bottoming yet, it's not time to buy ADA or any of these other altcoins yet either. Okay, good luck. Send me a message if there's anything you'd like me to look at. We've got exciting things going on next week. I'll update soon.